Hi guys, today we will discuss trend lines and support and resistance lines. Now these are the most important aspect of trading because you have to understand what really is happening and that will make or break the game. Now if you look at it, I have not set any indicator here. No BB, no RVI. But I'll be first focusing on support and resistance lines. Now, this is the current chart. This is January 2018. And if you look at it, I've just made lines on the highest point. Now, let's look at this highest point. This is the major highest point. But once it opened higher, it took support on the highest point. Example, it closed below it, but the next day it opened above it. It closed below it, the next day it opened on the line. Same thing, it went lower, then it went higher and took support on the line. Now we made the line on this high. We never knew they will be following it. We don't know that. Right here, I've made the line on the top. This is the low. Even here, it's not touching the line, but it's staying above the line. Now this is the power of support and resistance. Because once you're trading, you have to have an understanding. Okay, if it falls, what can I expect? Example. Another example. Let me make a line right here on this low. Now once it made this low, it went higher. Made a double high, double top. Went lower. Made double lows. But you knew from this high that this was the second line. If I make a third line on many close on this number, if you look at it, this 1, 2, 3, this is the high, fourth high, fifth close, sixth open, seventh high, 7 times it touched this line, and here as well, 8, 9, 10, and here as well, 11. So once it touched 11 times and went higher, so after the fall, we knew that it can reach this line or this line, which is this low or this and then it again touched this line and opened lower. See, on the exact lines. It was doing the things, just honoring them. That's what the power of these lines are. Currently, I have not put the lines on every number, but if you look at it, you will understand that it does count. It makes sense just to follow them, and it will give you a real insight. Just look at this. I've put this line on this low, and it stopped at that high, at that line, and went lower. Just look at it. I have formed another line on these two lows right here. Just look at it. The first rise was stopped on that line. Second rise was also stopped on that line and fell off. Third high continued to go up but then dipped. Fourth high touched the second line, and so on and so forth. But the main point is the highest point. It stopped at the same high point. That is why I always tell you, look for these lines. They will change the game. They are really, really important because they are the ones that help you understand what to do and what not to do. Therefore, my aim remains the same. Follow my method, but always look for these levels as well because they will really they will iron out the problems. They are the best things. They help you understand, okay, if this high, it touched this high and went lower, then these are the problems. And let's look at it in this way. Wait a minute. This low, right? Okay, yeah, this low and this low is this line. Now, my point is, it reached the high points, right? And then went lower. Now, if you look at it closely, you will find that once it hit this line, the major distance to cover was this line. So from this low, 37.38 or 36.68, major players knew 45 was achievable. Now that means $17. That means 50% gain from 36. That's huge. Now the common retail investor is he is blind. He cannot see this. But a major investor, once this fall will happen, will know it. Oh, okay, no problems. We can make some money in Citibank. And they will be jumping in. And then you will be you as a retail investor will be shocked. You'll be saying, how on earth they knew that it will come back? Just look at this. I've now changed it to weekly level. And what do you see? The same lines happens to make sense. And just look at it here. I made the line on the extreme low right here. This low. June 2013. It touched 2014 April as well. And this line was formed on this lows or these lows. It touched the low again. Now, this high was formed on this high. And it stopped after some. Just look at the difference. This is December 2014 and this is June 2015. That's a 6-month difference. It still stopped at the same level. How on earth? Just look at it. If, let's presume, you didn't know what was ahead, you just formed the line on this low. This is the low, this is the low. Now this is 2014 April. Just move ahead. And what do you see? It fell off and took refuge around that same low. See? This was the second low because this was the first low. This should be second low. Why? Because this is the low first. This is the open close second. And then you have this open third, this open fourth, this open fifth, this open sixth. So it's 5-6 times it touched it. So this was the second important line. And on the weekly level, it changed its course from this line. If I change to the daily mark, and if I just, should I move ahead? No. This is, we made all the lines. Let us zoom out. We made all the line based on 2015. Just look at it here. 2014, 2015. And once we go to 2000, like weekly level, all lines made sense in 2013 as well. In 2013 July as well. Just look at it. All lines made sense every time. And it's not that like we manipulated some kind of thing. It's the common sense. It makes those lines, and if you just zoom out, let's zoom out further down. Right here. Just look at it. These highs were also on that same line. These two highs, the same line. This is the line that we draw on 2015 level, but it was touching the highs right here. Just look at them. It makes sense. This high touched the same line. This high was near that same line. Although we won't count this high, but my point is, even if you like move really back, you will see all those lines telling you the truth. They work. So if you're trading, just look at those lines. They will help you understand, okay, if it touches this low, then that low could be touched. So you can expect a major change. Now, if you remember, Citigroup, this is the monthly chart. All those levels were touched here. See? That is what makes sense. This is 1994. So they made sense. And once the price went higher, at that time the points of return was stopped. Therefore, it could go even higher because there were no major resistance. But once it has fallen lower, now the major problems have started to come up again. And that's why it's the make or break stuff. Any stock that you see, if it has crossed all the major problems, example right here in 93, it made this high, went lower. But once it crossed this high of 81, it was boom, boom, boom. It went from 81 till 360. That's what? 8, 16, 24, 32. That's 4.5 times return. Within how much? This is October 1995 and this is June 1998. So let's presume 2 years and 10 months max. And if we go to this first high, that's what? 2 years and 6 months max. So what? Within 2.5 years, you made 450% return. Simple. And this is a good stock. So you would be earning dividends. And those are separate. This is only the buy and sell profit. No dividends attached to it. And you made so much money. That is why I always tell you that look at this thing from a different perspective. And once you will look at them, the losses will be gone out of the window. Only the profits will make or break you. You will be in sorrow that, oh God, I missed Citigroup with 450% profit. I bought some other company which gave me 250% profit. But still, you are in profit. Why? Because you have equipped yourself with the best techniques that major investors use. And retail investor doesn't even know about it. That's what matters. Thank you.